Hey guys, I decided to make a companion video for the Candlestick Basics document. I figured maybe it'd be a lot easier to see and have it explained versus just reading a bunch of material. Hopefully this will help. All right, so what we're going to do is look at what exactly is a candlestick, what it means, and how it's used. So basically, a candlestick is, a way to display information to people of what has happened or transpired in the past, right? Um, it tells certain things through its anatomy of the wick and the body, right? These particular things illustrates um, what has happened in terms of price for that particular time period. So the two types of candles that you're going to mainly see are going to be red and green candles. Um, red indicating that it's a bullish pattern. Um, the price opening down here at the bottom of the body and closing at the top of the body, indicating that it closed at a higher price. Okay, so the expectation is going to be that the next candle, that opening is going to be where that close was. Sometimes it doesn't happen, and it's what they call a gap up or gap down, where the price just jumps. Usually that occurs when there's a huge momentum in that particular direction. Okay, the highs and the lows indicate where the price traveled to during that time frame. As you can see here for the bearish side, it's completely reversed. It's red. It opened at the top of the body and closed at the lower portion of the body, indicating a decrease in price. Okay, so there's the stock or the security is losing value. Okay, but the highs and lows still remain the same. All right, so notice that I've been talking about candles and time frames. I didn't specify a particular unit there. That was on purpose because these things are measured in certain time frames. A real common one is a 1 minute time frame, 2 minute, 3 minute, and 5 minute. I figured the best way to illustrate this is using the 1 and the 5. So 5 1 minute candles equals 1 5 minute candle, and the opening price of the first candle in that time span, and the last price for that candle is going to be the open and close. The ranges that it traveled is going to be the lows and the highs, and vice versa for a red candle, right? So this these two are equal. Sometimes there's a lot more advantages to using a higher time frame, such as like a daily or a weekly or even monthly. In those time frames, you're looking to see about putting a transaction that is more geared towards swing trading. It's going to be days, weeks, or months that you're going to keep this particular security for as an investment. Um, that's kind of like that's the longer time frames is the time frames you want to see these particular movements. Okay, so candles in a series together, where the price is climbing up, is tend to be called a bullish trend. You'll see a lot more green candles, and as you can see here, all the candles are shaped differently, they're sized differently, and but within that display, it tells you a lot about what's happening in the market. for that particular time frame. As you can see here, you know, this candle has a big body, and this one has very little body, mainly all wick. But you look at this next one, it doesn't even look like it has a lower wick, and it goes straight up to a higher item. And then this one is, a long wick going down and a small body there. Um, those are kind of keen to seeing this. You can predict that there was going to be a downfall, right? But we'll get more into those candlestick patterns later. Um, you'll have to understand what a candlestick is first, and how they appear and how to read them, and then how to read them in a series, right? The same thing is going to be said for the bearish trend. More red candles, price is going down. It's continuing to go down over a longer period of time. Okay, so let's take a look at this in the charts. What you're seeing right now is Weeble. I'm going to collapse this to a 1 minute chart and get rid of these. So this is a particular stock. Its symbol is called SNAP. You can see that up here. And I just went to just a random day. Went to it and selected the 1 minute chart to so you can see how this has been forming. You can see that the opening time, the price started to fall and it started to what they call consolidate. And then you see these prices starting to go up higher. That's an accumulation. And then you see the rocket, take off of this thing. It went from basically $49 to roughly about 520, around there. Okay. So to show you the aggregation of a 1 minute candles, 5 of them, to a 5 minute candle, I'm going to show you where I'm going to split this grid up, and I'm going to put in the same stock in there, and I'm going to tell it to be on a 5 minute basis time frame. Okay, so 5 of these 1 minute candles equals one 5 minute candle. And to illustrate that, we'll go in here, we can put in a drawing, and I'm going to draw the high here. As you can see, that's the high for that one candle. I'm going ahead and draw another one to where this is the opening price. There you see this opening price. Then you'll see the closing price. It is on a 5 minutes. It's going to be here. This is the 5 minute candle. That's the closing price right there. Okay. And then the absolute low of that particular range, which is going to be here, which you can see there. All right, so these 5 1 minute candles, and we'll draw that box. Maybe I should start with a box from the beginning. So it's those candles right there. Okay, so we can do another one. So let's say come on. All right, so we'll do one starting at 9:45. You can see that I'm going to match the bottom of that to hit the bottom of that candle. And then it's going to hit this very top of that candle. So there should be, so that candle should be right there. Let's move there one to see. To see the wick. Oh, wait a minute. I think I'm 1/1 with that box. Box is more than 5 minutes. There. So it's actually going to be this particular candle right there. Okay. So that's the aggregation periods. I'm going to bounce it back down to show you that you can do this on a 5-minute basis, 10 minutes. Okay. These black bars are pre and after market hours, and these gray bars, and this black bar is the actual open market day, the time for the market time. So here you can see this was a pretty good run up um, from there to there, and you can see it even higher on a 1 hour. So every candle represents 1 hour. So Snap has been on a pretty good growth recently. So that's from $40 to $47 in a matter of three trading days. It's pretty good. Now you can see it on a daily time frame of what it's been doing. Each candle is a day. You can see that gap up right there. Just gapped up. So something fueled that, and as you can look down here, it is a good earnings. Surprise of 34.38%. So that's your catalyst right there, why it jumped. So if you follow these companies very closely and you're seeing how they're doing well for that particular quarter, that's the kind of data you want to see and act upon to do a large investment and then see that huge jump up. Okay. All right, guys. Well, that's it for this particular content. I figured it'd be best to see that. I do need you guys to understand this very well, because once we start moving the candlestick patterns, we're going to be not looking at one item, but we're going to be looking at multiple things, including moving averages, indicators, and that kind of stuff. So, you know, I'm trying to build you guys up solid foundations, understandings of um, these basics, because you're going to need to know them very well to understand the the higher forms of these things, to where it's actually uh, allows you to identify direction um, and where things would more likely occur. All right, guys. See you later.